Welcome to Market Call. Our guest is Jaime Carrasco of Canaccord Genuity. He's going to take your calls, emails and tweets on North American dividend stocks and precious metal shares. Looking forward to lots of questions about gold and silver producers. 1-855-326-6266 or email marketcall@bnnbloomberg.ca. Jaime, thank you very much indeed for joining us once again.
Thanks for having me back. Nice to be here.
What's exciting you in the market right now? Copper's on fire. Gold is down from its highs of last summer. Well, give us your thoughts on gold, because you've spent a lot of time analyzing it.
Well, let's not forget that gold is manipulated. They're paying a lot of fees doing it. And I always put that in the back of my head. And that's why I always say, the mantra all along with gold has been it's about the fiscal deficit that we have. The longer it takes, the bigger the fiscal mess, the higher the price will correct. So from that perspective, for me, the key thing is to buy right and sit tight, as Jesse Livermore said. And right now I have a lot of gold and silver producers which have massive leverage to the price. And I think the price has to go higher. It's not being allowed to go higher. But copper itself, like I said last time in the last interview, is signaling a lot of money devaluation. You know, people think inflation is that things are going up in price, and it's not. The things are constant. It's the money that is devaluing. That's what Latin Americans learned very well through the 70s and 80s and throughout all our lives. So getting rid of your cash is key. And I think that what we're facing today is a little bit of a different storm, a bigger storm, because it's about the currency reserve. You know, we hear all this chatter from the central banks talking about a reset. People better understand what that means. It's a monetary reset, because it's the only way that we can pay back all of these debts. To me, that's clear. And so I continue to position myself using 4,000 years of history and forgetting about the noise that we're hearing with regards to the prices. Copper above 450 is a bad signal. Same thing with everything. Go to the supermarket. You know, they keep telling us we don't have any inflation, but money devaluations are occurring, and people's dollars are not going as far as anymore. Especially as we see also the middle class being decimated by policy. Look at the CPI number today. The Fed threw $2 trillion, and all we achieved was that. To me, that's not a good number, right? We're supposed to get a much bigger rebound, but it wasn't there. So how much more money are we going to have to throw to keep this thing alive, right, to keep it going? If you look at debt, when we get to that level, it's exponential money printing. And that's, I think, where we're going. And that's very bullish for gold. It's not very, very bullish for the dollar. And that's the key concern, the fact that the dollar couldn't muster a rebound about 92.50, which was the big breakdown last year, for more than about a week. And then this jump above 91 only lasted hours yesterday. So that, to me, is the key signal, is that the dollar, the currency reserve, is in trouble, being shown. And then again, look at 10-year yields as well. The Fed is losing control of yields. I look at the world from the fixed income side, and there I see a completely different storm than what the equity markets are showing. So I'm very comfortable with the position I have. I have a lot of financial life, as I would like to call them.
Okay, and what about interest rates? Sorry, I guess some people would dispute that the Fed has so much control over bond yields. They do over short-term interest rates. But what about interest sensitives? Are you interested in those, or do you think interest rates will inevitably rise? Sorry, go ahead.
No, I think rates are already rising. Look at the 10-year yield sitting at right now 165.9. Like, that's not a good number, because it was at what, 0.5 this time last year, something like that. Like, it got too ridiculous. Bottom line is, in order to bring yields down for the whole yield curve, they're going to have to print a lot of money, because nobody's buying treasuries. They're the only buyer. Same thing with Canada. I read somewhere that the Central Bank of Canada now has bought 40% of our debt. Well, whenever we get into this situation throughout history where central banks are buying the debt, producing debt, buying debt to keep all of this spending going, well, it's a facade. And that has very negative consequences. And I rather hedge for the consequences than the noise or the narrative that I hear today that everything's hunky-dory, right? I think we're on shaky ground when we look at it from the fixed income side, and I'd rather prepare for the other side of that hill.
John has sent you an email, wants to know about New Legacy Gold. Remind us what they're all about. Where do they produce or explore, Jaime, New Legacy?
Well, New Legacy is an explorer. Let's separate for a second because I like New Legacy, but let's touch base on the kind of risks that you're taking with an explorer. I personally think that right now, if somebody's entering the gold sector, the producers or the precious metals, because I prefer silver, the precious metals is the place to be. The precious metals are trading at a ridiculous value in relation to their earnings right now. Now, I always advise build a good solid foundation with the producers first, and then start looking at the explorers, because the explorers are a different animal. They're about the drill. If the drill finds gold, they will go up, like Newfoundland Gold is doing right now. New Legacy I own. I'm very excited about it because they're drilling in the Kirkland trend in Nevada in the U.S., and we haven't had a big discovery yet in the U.S. When that occurs, it'll be like that fracking moment before everybody jumps into the fracking side. Right now, we haven't had a big discovery or a lot of work done in the U.S. for quite a while. So once one of those discoveries takes place, New Legacy could be it. Well, I think we're going to have a lot of American money coming into the sector, and that's going to be very bullish. I own New Legacy. It's being run by people from that have all come out of Barrick. There's a lot of optimism about it. They had the first drill results came in. They had some gold showings, but they weren't that great. But there's a couple more going, and we should be getting more drill results at some point. I'm willing to wait on a couple more before I make a ruling on whether I'm going to hold on to it or pull some money out. But for now, I'm sitting on it, and I don't have a problem acquiring at this level, knowing full well that it's an exploration play. If the drill doesn't hit, we have trouble. And that's why you don't want to have just one. You want to have at least a selection of 5 to 6 of them to diversify that risk. And then you're looking at real estate. What the explorations are about is about having good quality real estate with good potential. And these guys have it. They're in elephant country.
Okay. And so generally, what do you want to see before you buy an explorer? Are there a couple of things that...
I already own this
Okay.
one. What I want to see is continuation in drill results, right? Now, I'm not going to get scared by the first 2 results coming in a little negative, because they have to figure out exactly where the anomaly is. Once you start to hit, you start to move forward. So I would want to see at least of all I believe they're doing 12 holes. We've only heard from 2. So I would want to hear from 4 to 5 before I make a decision on where I'm going to pull some money out or add to.
Gail is, sorry, Jaime. Gail is on the line from Pickering, Ontario. Go ahead, Gail.
Dale, actually. I hear a lot about coming commodity super cycle. I know commodities have gone up quite a bit already, but given a coming commodity super cycle, how would you position yourself from a Canadian perspective with stocks or ETFs, but Canadian dollars? Thanks.
Okay.
Bye now.
That's a great question.
you.
First of all, I think that when we look at the commodity super cycle, you have to understand that we're going to have 3 different components that are going to drive it, and it's going to be a long-term cycle. First of all, it's going to be demand as the global economy picks up. Second is the fact that we haven't been, because the prices have been so low, we haven't really been exploring for much, and so we have a bit of a lack of supplies of commodities, copper, and everything. And thirdly, the key is again the devaluation of money. Right, that money is about to devalue. To me, that is a big storm, and that's why the commodity super cycle is definitely gonna play out. Now, how to play it? Personally, I think the best way to start is with the ultimate hedge for inflation, which is gold and silver. And luckily for investors, those prices are suppressed, so it offers a really good opportunity still into these stocks that eventually will go. It's impossible that copper's going higher and silver isn't. Silver, if it was to follow copper where it's sitting right now, we should be looking at about 30 to 40 bucks. We're not. It's sitting at 25. To me, that's a benefit because I continue to acquire the producers that are gonna move when this thing finally goes. And we have a lot of when you look at silver on its own, we have a number of issues on the supply side, right, which are worse than copper and other commodities because the prices haven't been there, so we have not had much production anyway. So look at what's happening with the Perth Mint in Australia. with the Royal Mint. Everybody's having a real hard time sourcing silver, right? So that's how I would be playing it, is within the silver side. And also look at what's happening with this silver squeeze movement, which has taken everything out of, complete surprise, in that now we have a populist movement that's actually acquiring a lot of silver, and it is showing. The CFTC and the COMEX have said that at first they said, oh, we have no problem, but now it's definitely showing in problems within it. So that kind of signals how tight the supply is, because we haven't been producing much, right? And so because of that, that's, I think, when it comes to the commodity super cycle, that's where I would be playing it first. Silver and gold, I just added a bit of copper, but it's only 5% of my exposure to that side.
Do you have a particular name in silver, a silver miner?
Yeah, I have a number of them. I like USA. I like Fortuna at this current price with this pullback. I think it's an awesome entry point. First Majestic. Again, I'm not playing this for $25 silver. I'm playing for 35, 40, and much higher. At that point, nothing's going to matter. These little declines that we're seeing are going to be just noise. So yeah, again. Sure. When you're picking up producers, good quality management, low cost of production, reserves on the ground is key, and where are they geopolitically? Which is, I think, one of the issues with First Majestic, with Fortuna and this merger, because the gold asset they're buying is in Cote d'Ivoire, which, I'm trying to understand the geopolitical risk a little bit better. But then again, Mexico isn't looking that much better anyways, right? So I think all of the political noise that we're hearing throughout the world, that's going to be inflationary, because if you look at Mexico, it's about labor issues, right? So again, those are inflation. Sure. And I'd rather see those be solved now before the prices spike, because as the price spikes, it's going to pay for all of those issues along the way anyways.
Colin is calling from Sarnia, Ontario. Go ahead, Colin.
Thank you, Andy. And Jaime, thank you for taking my question. It's about Seabridge. I remember 15 years ago, this was the hottest stock, and you don't hear much about it. So I'd like to know what you think.
You know what? I looked at it about 15 years ago. I've looked at it now. We have it as a speculative buy with a $31 target. I've never been too impressed with Seabridge, only because they have a big deposit, but it requires a lot of money to get it going, and the money hasn't been there up to now. So at some point there will be money. At some point, this will be a great reserves on the ground play. But again, when you look at the current producers, I'd rather be putting money there, because at least I have those reserves on the ground. They're priced at the same level as this one, but on top of that, I have production upside, and I have growing dividend yields, right? So that's my concern with Seabridge, and that's why I keep looking at it, but it doesn't impress me. Eventually, maybe I will, and eventually it gets taken out. But considering the current valuation of the other ones, I'd rather be shopping at the other ones that are offering cash flow and dividends right now.
Sean is standing by in Norwood, Ontario. Go ahead, Sean.
Good afternoon, gentlemen. I was just wondering if I can get Jaime's opinion on Kirkland Lake Gold, and maybe what he thinks the 1 year outlook might be for if the price doesn't change from this level. Thanks. I'll hang up and listen to your answer.
Thank you. Thanks.
Well, when it comes to the 1 year target, all I can tell you is if in a year from now gold is much higher, this thing's going to move. I own it. It's part of the core of my portfolio. Within my portfolio, the special opportunities portfolio, it's important to understand that I use asset allocation rebalancing. So if I was rebalancing today, I know for sure Fortuna would be bought. That's in the portfolio. It's down on a percentage basis. Same thing with Kirkland Lake. If it was down, it would be bought. And if it was up, it would be bought. Within that portfolio, I have a lot of blockchain. So the blockchain has delivered quite a lot of growth over the last year. And what I was doing is trimming back and constantly buying more of these stocks. So today I own quite a bit of them, and I'm quite happy to continue to hold and wait. Kirkland Lake, to me, is an amazing story. I used to own the Tour. They own the Tour right now. It's a great deposit at this current decline in price. I think it's a beautiful entry point. So I continue to add, and I'm quite happy to add, because again, I'm not buying this just for the next year. I'm buying it because once this storm hits, These are going to be amazing lifeboats, and they're going to move much higher. We're going to see the dividend increase as well. This one has started a dividend. It didn't have a dividend a couple of years ago. And you know, as the prices pick up, what are you going to see from this? Increasing revenue, the increasing value of the reserves on the ground, increasing dividend. So, you know, I'd rather buy it and just wait comfortably and patiently. The one thing that people don't have is the patience to hold, to buy and hold it. And this is one that you, if you're buying it, you're buying right. Amazing company.
Dennis is standing by in Burlington, Ontario. Go ahead, Dennis.
How you doing, gentlemen? Peter,
Very good, thanks.
Andy, you should have a program on precious metals at least once a week. I'll bet your lines are full.
That's not a bad idea. Thank you.
Great show. Yeah, I was wondering what you think of Skeena Resources. I won't go into it what I think about it because I want to listen to your opinion. Thank you very much.
Before I move over to Skeena, I just wanted to update on the Kirkland Lake. So we have it with a $70 target right now, and it's trading at $45. That's our target as of April 9th. That gives you an idea of the leverage on the upside on Kirkland Lake. Skeena is one of the companies that I keep looking at. I haven't bought it. It's actually done quite well, and it's paying out because of the drill. Again, back to the exploration story. And you know, they keep getting really good hits on the drill. Because of that, you know, this one's one that if I didn't own it, I would definitely be taking a look at it. There's quite a bit of upside. We have it as a speculative buy because it is an exploration development play. We have it speculative buy with a $5 target and currently trading in the mid threes right now. As long as the drill keeps finding gold the way they are, which actually the results so far are quite encouraging, and the deposit continues to grow. It's one that if you have it, continue to wait and watch it grow as the drill comes in. Now, here's a comparison between this and back to Seabridge. Seabridge, we already know the size of the deposit, so that is already priced in. You're not going to get that exploration upside as if the drills are showing that the reserve can grow. That's why you're buying an exploration play. I don't want to just buy reserves that have already been found on the ground, because all I'm getting is the upside on the price of gold. If you're going to play that, you might as well something like Skeena, where at least you're getting the drills are constantly growing that reserve, and that's where you're going to get the exponential reward from having bought an exploration play.
So they're developing two projects there in the north, the so-called Golden Triangle of Northwest BC. Yeah, okay.
Yeah,
we were having a bit of trouble
there,
with the...
With the what, sorry?
We're having a bit of trouble there with the... Sorry, we're having some trouble with the chart there. Okay. Yeah. Thanks very much for that question. Mike in Etobicoke, Ontario. Go ahead, please.
Good morning, gentlemen, or afternoon, rather. I'm interested in a streamer, Empress Royalty. EMPR is the symbol, and I'll be quiet and listen to your wisdom. Thank you for your help.
Thank you.
Actually, Empress is a new addition to the portfolio. I actually quite like it because they're silver heavy. It's hard to get a silver heavy. Everything seems to be overweighted to gold right now. So when it comes that's why I added it. I like the management. I like the properties. It's I'm very excited about this one. It's a new addition to the to my book, and I'm gonna watch it quite. You know, I'm very happy to own it, and I think execution will go well going forward. And I also like the streamers. I think eventually we're going to have acquisitions within them. So I have been moving from some of my mid-tier streamers over to smaller ones that should get acquired or are going to, and I think Empress could be one of those, and I'm very happy to own it and wait on it.
Sure. Bloomberg showing pretty small right now. Bloomberg showing a market cap of a bit more than 40 million for that one right now. We were having trouble with that chart.
It's brand new, just getting going.
Jaime?
I said it's brand new, just getting going. So, you know, you have to be a little bit patient. By the way, I hope it's not the only one you have. I hope you have others like Franco-Nevada and the bigger boys. But add this to...
Let's check out those past picks. Jaime was on our show March 27th of last year. Your first idea, Alamos Gold. Now, they've had some trouble in Turkey, I think, but it's only a modest part of their portfolio last time I looked.
Correct. And again, geopolitical risk. That is the one thorn on their side. But otherwise, they are executing very well. We still like it. We have it as a buy. I like it. I think it's a great company, and I think hopefully at some point the whole issue with Turkey gets resolved. But again, the geopolitics are going to become a greater and greater issue going forward, and I think people have to be aware of that. We still have it as a buy with a 1550 target.
You'd stick with that one right now? Okay.
Definitely.
Cisco royalty. Now, this one has last time I looked, this one has underperformed some of the big streamers like Franco-Nevada and Wheaton Precious. Would you buy this one again? Let's see how it did anyway.
No, actually, this is one that as I was towards the fall, as the price of silver broke above 17, I was already planning on increasing my silver content. So I had to choose which one was going to go, and this was the laggard, so it definitely went out of the portfolio, and only because of that. But again, it's a streamer, and when it comes to the streamers, this one's a bit of in the middle, because what I've been doing is adding some of the junior streamers that are coming along from behind, but holding on to my bigger ones. So Sandstorm and Franco-Nevada, those guys are solid in the portfolio. But then we had to trim them because it was underperforming in share price. It's the one that I decided to pull the trigger on as I switched over to greater silver content. By the way, we have it as a speculative buy with a 675 target.
Okay. I'm just looking over the past year how it's done versus, it's actually done pretty well versus Franco and Wheaton over the past year, but I think longer term it has struggled a bit.
Yeah, I kind of picked up sometime in May, right? Sorry, I was looking at Cisco Gold. We have it as a buy with a $24 target on this one.
Okay. Yeah. Okay. So this is a Cisco Gold royalties. You have you're still in that one?
Correct. Sorry?
Oh, okay.
No,
okay.
That's the one we were talking about, Cisco Gold royalty, which was the one that I pulled out of to add more silver.
Oh, okay.
Yeah.
No problem. Okay, a Cisco Gold royalties. Yeah, over 3 years it's up only about 17%, whereas Franco and Wheaton are up more than 80%. Okay,
right, that's why
let's move on from that.
It wasn't moving. So when decision on what do I trim to add something else, this one went.
Yep. Fortuna Silver. It's fortuitous timing. Let's see how that one did. We did just speak to the CEO, and you said you'd buy this one again, Fortuna Silver.
Well, considering that it was sitting at about $12 just last week, if we had done the call at that point, we would have had a completely different animal. Look, everybody's complaining because they went out and bought another company. Every time that I either own the acquirer or the acquisitor, I'm very excited. I think it's great because it's just making, I'm not buying them. I love it when my companies are buying other companies, not just me. And that's the case in this one. I think the acquisition's good. I'm, taking a look at Cote d'Ivoire, and things are definitely have settled down there for quite a while. Geopolitics was the only issue. But I think it's a great acquisition because, a silver company buying a gold company, I think it's it's what do you call it when you marry above your social status? Well, I think that's a way to look at this, to have a silver company take over a gold company. I like the management. They're going to hold on to the Rocks Rocks Gold's management, and I think it's a great acquisition. And by the way, because I work on asset allocation, it was if I was rebalancing the portfolio today, this would be bought. I would be buying this because now it's under my the relative percentage of all the other companies. So the beauty of using asset allocation for your buy and sell decisions is that it takes it takes the emotion out of it, the fear and greed component, and it makes you make good decisions. And I think at this price, once we see gold above 2,000 or greater and silver above 30 or greater, this acquisition is not going to matter because of the profitability of the overall entity. So, I look at it as just a little bit of noise right now, but then it's giving me a great re-entry point into something that I really like. And 124% from last year is not something, it's not too shabby. It could have been better, but, I think going forward, it's going to be even better.
Okay, let's take a break. Jaime Carrasco taking your questions on North American dividend payers and precious metal stocks. We'll be right back. Jim in Calgary, go ahead, please.
Hi, I have done well on Microsoft and a couple of other tech stocks listed in the U.S. I hold a pretty good position in Barrick. Would Jaime recommend selling some of the tech stock positions and picking up more Barrick?
Again, that's an easy question because if you look at asset allocation, and I think that's the way to look at that decision. If you look at the percentage increase you've had on your Microsoft and your tech stocks over the last 2 years, I don't know how long you've held it, versus the relative value of the precious metals and how much they dropped, what I would automatically do is bring it back to where I had it at the beginning. If you started, a year and a half ago at 10% in precious metals and 90% in tech, now you're sitting probably at 2% in precious metals and the greater percentage in tech. I would definitely sell and bring it back to that rebalance. That process is 80% of a portfolio's long-term return because it takes away the emotion. When it comes to Barrick, I don't own it because I prefer others of the seniors with more exposure. I'm also never being too keen on the management of Barrick. I think it's fat and overdone, but they've gone through a massive change. However, this company will move as prices go. It's going to move for two reasons. First of all, it'll be the one that the pension funds come in first because there's very little homework to be done in relation to analyzing some of the others. And on another side, it's also the leverage of all the reserves on the ground and everything else that's going to drive it. I think the other ones are going to outperform the Barrick, but it's not a bad choice. We do have it as a buy with a $40 target. It's also a world-class producer, so you have a lot of mines working all over the world. So yeah. I think Barrick is a good choice if you already own it. And again, you look at the relative outperformance of the other sector, how much it's grown, and just rebalance to wherever you started.
Gordon in Winnipeg, go ahead, please.
Good morning, gentlemen. Good afternoon, I mean. I'm phoning about Oceana Gold. As Jaime will know, the operation in the Philippines, Didipio, is shut down. I was just wondering if he could give us a general impression of Oceana and if he thinks Didipio is going to be brought back in line. Thank you.
Right. I personally don't own Oceana because I've never liked the geopolitical risk in the Philippines. But we just dropped the target down to 270. That was in February. We still have it as a buy, though. Geopolitics is the reason that I haven't looked at this company. And again, I use 4 quadrants when I choose the companies I'm going to buy. One is management, cost of production or possible cost of production, resource on the ground, and more importantly, geopolitics. I think that's such an important component because, a lot of these countries are in, the geopolitics are going to get worse and worse. So that's a risk that I'd rather not take. And that's why I've looked at Oceana, but I'm not interested in owning it because, again, I don't understand what's happening in the Philippines and a lot of these places. And I think it's only going to get worse. I'm concerned about Mexico right now, right? I'm not adding to Mexico, but I'm not taking any money out. I'm just monitoring the situation. But I think all those issues are going to get worse going forward. And it's one concern that people should have when looking at where they're going to place their money.
Okay, let's head to Ash in Grimshaw. Go ahead, Ash.
Good day, gentlemen. Just wondering if I can get Jaime's thoughts on pure gold mining out of Red Lake, Ontario. Thanks a lot.
Pure gold. Give me 1 second. Pure gold, we have it as a hold with a 225 target. I don't own it. I've looked at this. Our research department follows it. Overall, what they're saying is that while there is a degree of growing pains related to the ramp-up period of any operation, this could be often mitigated by incorporating increased design. Bottom line is issues starting up a mine, right? That's happened before, and it's not like turning on your iPhone. These things require massive construction, and you have to be patient to go through those periods if you already own it. I would probably be averaging down a bit and waiting and see how it all develops. But usually when we have these issues on ramp up getting started, they always signal a really good entry point as well, because it's like you got to get over the hump, and once they're through the hump and the ramp up operations, it usually offers really good entry points at very cheap valuations. And this might be the case with this one as well. So if you're participating in it, it wouldn't be my only pick, that's for sure, but I would definitely have it within a spectrum of having at least 5 to 10 companies. And this one I would just add a little bit if I owned it, but I don't.
They're in the Red Lake area with that mine, I think, Red Lake, Ontario.
Correct. They're in Red Lake, Ontario.
Sure.
Correct.
Sure.
Yeah, and it's
let's take a break.
Of a mine from the 1930s. Yeah.
Okay. It's a vintage area for a long-standing big gold producer, Red Lake. Grant in Edmonton, go ahead.
Good morning, Andrew and Jaime. I have a question regarding the gold and silver producers that are very solid and the current price of gold and silver. Jaime, for myself and other viewers who are holding these precious metal equities, are the values of these companies being reflected based upon free cash flow, price to earnings, and leverage based upon the current commodity prices? Thank you.
As Warren Buffett would say, these are value plays right now. Let me put it into context. Last time gold was sitting at 1,600. I'm looking at the chart right now, which was back in 2011. Okay. The HUI, which is the sector index, was trading at exactly 610. We're sitting at 287 right now. Whoa. So about 50% lower than the valuation before. Now, what is that signaling? First of all, that's signaling a massive opportunity as far as I'm concerned, because I'm buying very cheap companies with solid earnings, with solid earnings upside and solid leverage to that to the price of gold and silver at very cheap prices. But it's offering a massive opportunity. So that's why I keep saying, look at the producers. There's no need to start taking risk within the explorers just yet if you haven't built a solid foundation of producers. Now, what I'm more excited about is that I personally think that gold's going north of 3,000. Last year, everybody was talking blockchain. Everybody's now talking Bitcoin and all this because, if you look at some of those plays, they had about a 1,500 to 2,000% increase. But you have to realize that at $3,000 gold, these companies are going to have an earnings move of that leverage, right, of about 1,500 to 2,000%. Never mind the dividend that's going to be paid. Never mind the reserves on the ground. That's why these companies, I keep saying, these are the most amazing financial lifeboats you can buy. And what the current valuation at 276 of the HUI is signaling is that the money isn't coming into these companies just yet. But when it does, one of the things that Bitcoin proves at 60,000 or 57,000, whatever the number is that there's a lot of money sloshing around. So eventually the light is going to come on and this sector is going to be bought. That's why I'd rather own it now. I'd rather buy things when nobody's buying them and hold on to them than before. It's funny, as Canadians, we should really remember that analogy that I think it was Wayne Gretzky said. Don't look at where the puck is, look at where it's going. Well, I can tell you that these companies are going much, much higher, and Wayne Gretzky would be on my side on this one.
Let's head. We're tight for time. Let's head to Ken in Canmore, Alberta. Go ahead, Ken.
Yeah, I wanted to get some thoughts here on SSR Mining. It's a gold miner, but concentration in North America, some Argentina. Looks like a good value following up on your last response there. SSR Mining.
I think it's great. I think it's great value. It's ranked as a buy with 26. I always own this for a long time. It's one that I actually don't own right now, but it's a company that, it's one of those that I'm a little bit torn because I would have to sell something to buy this one, but this one falls into that valuation that I like, and it's going to perform well. It's the old silver standard, I believe. Changed the name to SSR Mining. Great company. We have it as a buy with a $26 target, and another one that you can build a good position on and just wait. Buy right, sit tight, and wait for the storm to hit.
It's always a dilemma, isn't it? You see a company you like, you have to let go of one of your darlings. You can't owe everything.
You can't buy them all, right? And that's why the discipline just to hold on and wait, and monitor. The other thing is when you're managing a bigger portfolio, it's not like, it's a lot harder to just make changes. So I want to make sure that I hold on to the ones that I've chosen. And this one's one that could be in the portfolio. It isn't right now, but it meets all the criteria for something that I would buy.
Let's squeeze in one more question. We've only a minute left. Joe wants your take, please, on Argonaut Gold.
Argonaut. I still own this. I like it. We have it as a $3.25 target as a buy. I think it's a great project. They're working in Nevada. I really like the U.S. I think the U.S. is going to be one of the best mining jurisdictions. And like I said, I'm looking at the U.S. more like fracking before that wave started, because we haven't had any major discoveries, and the new mines are just not up, and the light hasn't come on within American investors just yet. But when it does, there's a lot of money that's going to chase these, and anything in the U.S. is going to do well.
We'll take a break. We'll get your first idea, Jaime, is Equinox Gold.
Yeah, this is a new entry into the portfolio only because Premier Gold got taken out by Equinox Gold. I've looked at this one for a long time, and I think it's a really good entry point at this price at $10.50. We have it with a $14 target, which we just dropped a bit. I think that's more because of the acquisition, but this is a very well executing company with Mark McEwen at the not McEwen. What's his name? Sorry, I have a little bit of a black on the name, but yeah,
keep going.
Great addition. I'm very happy to hold it.
Okay, so you're sticking with that one. Bear Creek Mining, I always think of them as a Peruvian silver play. Am I out of date on that?
No, you're 100% correct, and that's why I like it. I like silver.
Okay.
I think silver is going to have massive upside on the price because of the leverage. Silver at 26 is a gift, and Peru is silver country. Let's not forget that silver, 80% of it is a byproduct from copper mines or other mines. 20% is pure silver, so they're very rare, and this, I think, is going to be an excellent deposit. We have it at $6 target on this one, but a speculative buy on the development. And actually on Peru, I'm actually comfortable. There's an election coming. Let's see how that plays out. But so far, the elections in Ecuador and I think Colombia have gone positive for mining. So I like what's happening in Latin America.
Okay, and okay. What about, we could get a more left-leaning leader in Peru, couldn't we? Who might want more out of the mining industry?
We could, just like Mexico, we could. But again, I think Peru on its own is much more developed, much more closer to Chile. So I think if anything, we're going to end up with is greater labor costs because of the unions. But again, upside on the price will pay for that. That's why I'd rather see all of the labor issues get resolved right now at these current prices before we get the upside, because then they can come asking for more a little bit later and buys us time to build some margins.
Your final idea here, Newfoundland Gold. Remind us what they're all about.
This is exploration. So I chose 3 companies, gold producer, silver producer / developer, and then exploration, back to the exploration company at the beginning. These guys It seems to be a massive deposit. I like that. We have it as a whole, though. We have it as a whole with a 425 target. It's currently trading above $6, and I think that's going to continue because the drill results are coming in amazing. What actually is really good is that Eric Sprott, I think, 2 weeks ago added about $15 million to this company. Like, he really added to his position. That's always a good sign. So he also thinks the same of it. And I think we have the possibility of having a world-class deposit. We're not talking about original mine. If this thing continues the way it's going, it's looking to be a massive discovery, and they have the land package. This is a very big land package, right beside Gander, Newfoundland, one of my favorite provinces in Canada, Newfoundland and Labrador. So it's good for the rock.
Okay. That's interesting. Yeah, there's a bit of buzz about Newfoundland now in gold terms. Marathon Gold attracting attention as well.
Yeah. So I think, and these guys are going to definitely lead it if the drill results continue the way they're going. I think yesterday they just.
What are they looking?
Results.
Sorry, I was going. Are they looking at an open pit or an underground project in Newfoundland?
Everything seems to be at service right now. I think the drilling's no more than right. So it has the look of an open pit. Again, I think it's too early to define that, but we're definitely having the discoveries, and they're coming in like in beautiful grades. So yeah, I would let this one run for a while longer, which I have been, and I've been in it for quite a while. I've been in it below the dollar range.
Jaime, thank you very much indeed for joining us.
Always a pleasure. Thank you for having me.
Jaime Carrasco of Canaccord Genuity. Okay, thank you very much.